welcome to this week's live Path to Profit webinar. Welcome aboard to all of those of you who are either in the investor agent program, the flipping program, or the rental program, and some of you are actually already in the wholesaling program from this last year, and maybe one or two in the property management program. We'll roll that one out probably in the springtime, in case you're curious about that latter one. In any case, what we're going to do tonight, guys, is go over wholesaling in a little bit of detail, so you have a better understanding of it, and I'll give you the resources you can use to dig in further. But before we do, just a little brief housekeeping here. For all those of you who are relatively new or are new, you'll notice by default you're in mute mode. Obviously, that's because we can't have everybody live verbally at the same time. Okay, you can use, or you do use, the question box to type in your questions. From time to time, we will unmute you, okay, depending on the question. Also, if you're listening to this in recorded mode, that's great. But for everyone, whether you're live here tonight or you're listening to it in a recorded fashion, please remember to always look for the email from Beverly that comes out the very next day. So today, obviously, Tuesday, tomorrow, Wednesday, everyone will get the email with the recording of this webinar, and they're yours to keep forever. Okay, she also gives you updates to the systems, an update, to the platforms, to the material. We are going to be making some pretty major upgrades this year on two fronts. We're going to basically restructure the content because the developer has upgraded their educational platform. So we're constantly trying to stay on the cutting edge of what we call progression-based learning. And also these systems themselves, Digital Chalk is likely to be replaced. It's a good system, but we're basically getting ready to push the envelope on that based on our demands. So in any case, Beverly announces those things in the emails that she sends out every week after these webinars. So you definitely want to get that, look for the information. There's lots in there. She's also communicating other things to you also. So in any case, so welcome aboard to everybody. Veterans and you alike, and no matter where you are, whether it's anywhere between California, Maine, and Montreal and Miami, or some of you are actually in the beautiful Caribbean, so welcome aboard. We're going to go ahead and get started tonight, so let me just check the question box real quick one more time before we get started, and we're all good on questions. Okay, wholesaling. First things first, let me show you. Most of you, or all of you, should be silver level members. So I'm going to go real quick to the My Investment Services website, okay? And if you click on members area, I'm just showing you this now, okay? Go down here and click on silver level, all right? This takes you to where all the resources are. The obvious things up top in newsletter, the blog. Also, remember, the cash buyer report is now active. It's out there, it's active. It's not real time yet. It's a batch process, which means you enter your request. Here, I'll just show you, okay? Go to this, they click on that, it takes you to this screen, all right? Enter your name, email address, your state, city or zip code, or county, and hit send, okay? And you're gonna get an email with the report within 1 to 2 days, usually within the very next day. All right. In any case, that's there. That's pretty new. There's a special webinar on how to do your own meetup group, how to do your own workshop. And in here is all of the recorded webinars. These are all the interviews. We got more interviews coming up this year too. And in here, I want you to click on this. There's regular ebooks, which are all free to everybody. There's premier ebooks that you as silver level members get automatically for free. Okay, if you look in here, there's flipping for profit, there's investor agent, rental profits without the pain, wholesaling, and of course, rent property management, which is turning rental problems into real estate profits. This is the one I want you all to download. All you do is click on this download button, and you get the electronic version of this for free, obviously, because you're a student. You can get the hard copy. I don't know that I've ever done mine myself, so I don't know how you actually do that. But Beverly can give you instructions on how to get a hard copy of this or any of the books. It's usually a nominal fee. It's not much. I think it's like $10 or something if you'd like to hold a book, which is what I like to do. Okay. In any case, get the book, because tonight we're just going to do a couple of pieces of the subject. In here, you get a lot more details. Okay. So in any case, that's in there. Of course, you have all the marketing techniques and documents down here. All right. So let's get back to where we were. Okay. Within the world of wholesaling, I'll describe. Let me just go back up here real quick and give you a primer. Okay. There's some examples of ones I've done. But let's go here first. All right. We're going to just give you the anatomy of a wholesale deal, which is basically signing a contract. Okay. Then I'm going to go through some more information first, and then I'll give you some diagrams. I'm going to hit it from a couple different angles. Okay. So wholesaling is really nothing more than selling a contract. Okay. So assuming you have three parties here, you have someone who owns a property. Let's just call that party A. They own the property. Then you have party B, who is a wholesaler. Now, don't worry about what a wholesaler is right now at this point if you don't know. Okay. Party A, party B come to terms and execute a legally binding contract for the sale of the property that party A owns. So far, so good. Okay. Now, party B really does not intend to buy the property. What they intend to do is to sell the contract to another person. Sell the contract to buy the property to another person. We call that assigning the contract. Okay. So party B, the person who got the property owned by party A under contract, doesn't have to buy the property. They can actually sell the contract to buy the property, which is what in this example they're going to do. That person, wholesaler, party B, is going to sell the contract or assign the contract to another party, party C, and they're going to charge a fee, basically an assignment or a wholesale fee. And then party C will end up buying the property from party A. They acquire all the purchasing rights. Okay. So here's what it looks like. A, in B gets the property under contract from A. All right. It's an A to B exchange, original sales agreement. B sells the contract to C. All right. And C buys the property from A. Just real basic stuff, guys. If you're not quite sure what this actually means, just don't worry about it right now. I'll explain further here in a minute. I just want to get that first piece out of the way. Okay. So let me get past these examples here. And I gave an example of being on the buying end, an example of being on the selling end. Okay. Now, the reason why it works is this. Typically in the world of investing, you sometimes will come across people who have no money, but they have time. Okay. And that person might make a good wholesaler, somebody who really can't buy a property, but they can get a property under contract and turn around and sell the contract to buy the property and earn that assignment fee or the wholesale fee. Okay. It also requires perhaps a person like party C who has the money but not the time. Okay. So they just don't have the time to go out there and find the deals. But if you bring them a deal, they'll acquire the rights to the contract to purchase the property. Okay. So that's really that's all it takes is really somebody with time and no money and somebody with money and no time. All right. You've got yourself a nice little arrangement there. So right now we're just dealing with this simple basic stuff. In a minute, I'm going to get a little bit more complex. Okay. Now we already gave you the basic anatomy of it. So I don't want to go over this here. This is a lot of detail that you can read on your own. Okay. What I want to do is focus on this. Okay. The reason why wholesaling sometimes gets a bad rap is because of this. A lot of wholesalers get too anxious. They act hastily. And what they do is they go out there and find the properties first. Okay. Instead of going, I'm sorry, they find the properties first instead of finding the buyers first. It sounds natural to do that. Get something on the contract and go find somebody to buy the contract from you. Unfortunately, that's the wrong way to do it. And that's why a lot of people get hurt. So for example, let's say you got a property under contract. You don't intend to buy it. You want to sell the contract and earn a contract fee or a wholesale fee or an assignment fee. Okay. All the same. And then so you get the property contract, then you go to try to find people to buy the contract from you, and you don't accomplish that. And you've got a 30-day term on the contract. In other words, you've got to buy the property or turn it over in 30 days. So what happens if you exceed that 30 days? Yeah, sometimes you can extend the contract, sometimes you can't. But the problem is you just put the owner of the property at a really a bad disadvantage. They took the property off the market while you had it under contract. They didn't get anything for it, and now the property's sitting there unsold. So if you really follow through all that we teach, everything we do is win-win. Okay, and the right way to accomplish that with wholesaling is to find the people first. So, if you're in the investor agent program, you've already got techniques you can use to find buyers. If you're in the rental program or the flipping program, you've already got techniques on how to find the properties. Really, all you do is you can combine the lessons from the investor agent program with the lessons from either the rental program or the flipping program to be involved with some wholesale transactions. Okay, the right way to do it again is to find the buyers first, and it's actually easy to do if you use the right techniques. In fact, I will tell you this: you want to write this down, guys. So please write this down. The best wholesalers I've ever seen also create a website specific to their wholesaling. So they build up a list of buyers, people who have the money but not a lot of time. Okay, and they create a website where they put their properties on it that they're getting on the contract, and put it in front of their buyers to be basically first come, first serve. And that way they get the properties under contract more quickly. There's more demand created because they got the buyers first. Okay. And by the way, when you're wholesaling properly, it's like you're filling an order. You have a buyer who wants to buy a property, say like a 3-unit building. Now all you do is you go out there and fill the order. You go find the 3-unit buildings that this person may want to buy. Okay. And the more people you have who want to buy 3-unit buildings, the more quickly you can sell the contract for 3-unit buildings that you locate using the selling or listing techniques. Okay, so have a website. You definitely should have business cards. Okay, and you may also want to have like a monthly workshop for all your buyers and invite. There's all kinds of things you can do with workshops, but you can invite owners of properties there too, and you can do a lot of networking, all kinds of neat things. That's actually one of the techniques we teach in the investor agent program. Okay. Any case, so how do you find the buyers? All kinds of things you can do. And I just gave you a basic list of tools you can use. Most of them are free. Okay. Craigslist is still a valid tool. If you're in Canada, you're going to use Kijiji. And by the way, for the Canadians, yes, you can wholesale in Canada. In fact, one of our students is a real estate agent who does wholesale. We have several agents in the US who are wholesaling too. So I'll talk about that later. Real estate agents who wholesale. Okay. Any case, Facebook, LinkedIn, Twitter, obviously social media, you should be using that. You can put things in your church bulletin to promote yourself. Grocery store, flyers on a grocery store bulletin board. Restaurants, local publications. These are my favorites. Okay. I don't like the big papers. I like the small local publications. But you can use those tools to locate buyers. All right. Now, I'm going to talk about something else here that's going to maybe ruffle some feathers. But before I do, let me check for questions here real quick. So hang on one second. I just want to make sure we're caught up. Okay, so far. Good, we're caught up. Yeah, if you have questions, guys, we do have some questions. Okay. Okay, this is from Billy Moreau. Hey, Billy. All right. It is my understanding that in PA assignments such as the basic example would be subject to the real estate transfer tax twice. It's correct. That's exactly right. In a lot of states, that's true. So, Billy, what we do is, Bill, excuse me, there are workarounds for that. One of the things you can do, some attorneys don't like this, but it is legal to do this. When you go to a closing on a wholesale deal, okay, a transfer or an assignment, what they do is they literally mark the original contract null and void and write a new contract right there. So they mark null and void the contract from A to B, write a new contract from B to C right there on the spot, and they build in the assignment fee for the wholesaler. They can call it a marketing fee, a number of other things you can do. You can also bill use an LLC in your wholesaling. So in other words, let's say, Bill, you're the wholesaler. Instead of you getting the property under contract, you would have an LLC set up for about 125 bucks. And instead of selling the contract, you sell the LLC, because it's the LLC that's named as the buyer on the sales agreement. Okay. So it's another thing you can do is sell the LLC. So there really is no assignment of contract. You're simply selling the LLC. There's a couple of things you can do there, Bill. I'll talk about something else here in a minute called a net listing. By the way, in some states, they're actively working on legislation to stop wholesaling. They've been talking about it for years. I don't know if they'll ever really accomplish it, because every time they come up with new legislation, creative entrepreneurs come up with another way to do it. Okay. So I would never, I would never get discouraged when something changes, because, life always finds a way, and creative entrepreneurs always find a way too. Right. So Miho is asking, okay, do you think it's effective to put the title realtor and investor on the same business card? Yeah, it depends, Miho. I know for me personally, when I was 100% in production, what I would do is I would, as an agent, I could approach any deal. So what I would do is, depending on the circumstances, depending on what the factors were that were presented to me, I might approach a person from the investor perspective. I would approach them as me being an investor. And if it turned out that it really was not a good deal for me as an investment, I could then put on my realtor hat and say, look, I may not buy this myself, but I have, clients who are interested in properties just like yours. I could get the property listed and still sell it for you. Okay. So I could basically, no matter what I got myself into, I was always making money. Okay. It's better to go that way, by the way, Miho, than to go the other way. If you start off as an agent and then you say, well, that might not work. However, I might buy this myself as an investment. Just be careful that some people might misconstrue that as you operating inappropriately. Okay. So when in doubt, always approach something from the investor perspective first, if you are in fact investing in your primary objective. However, if you are an investor agent, like a lot of you are, and I am now, I generally approach this from the brokerage position. However, I do participate in investing. I always take care of my clients first, and then myself. And what's funny is when you operate that way, you actually find yourself being exposed to more available transactions, to more opportunities, because not every investor can buy everything, right? So in any case, good question. I appreciate that. Let's see. Was there another question? Yeah, okay, Dawn. All right, Dawn. That doesn't work in Washington State. So Dawn, is that the part about, that doesn't work in Washington State if you sell LLC interests within a certain amount of time of purchasing, contributing property into a LLC? Yeah, there's certain states. Always, whatever you guys, always look at your, when you look at the material, look and see what's applicable in your state or province, okay? Sometimes you have to be more creative. So like sometimes, let's see, that was Dawn. What we'll do is, you could even do it where you don't actually sell the LLC. All you do is you bring in a partner in the LLC and sell them shares of the LLC, okay? Maybe they could be the general partner or the primary partner, and you're a secondary partner, We've done that before too. So let's see, Miho says, right, so you think I should have investor business card with BRE number on it? Yeah, hey, Miho, just bear in mind, whenever you have a license, you should always disclose that no matter what. No matter what the transaction is, always disclose that you're a licensee. It doesn't mean you're going to operate as a license. You just need to disclose that you're a licensee. Okay, and in California, you have to put your license number on pretty much everything you use promotionally. whether it's a letter you send out or a card or anything, you've got to put your license ID on there in California, okay? Let's see, this is Sandra. What's interesting, guys, is this subject always gets a lot of questions. Okay, FYI, in Louisiana, wholesalers now considered a misdemeanor unless assignment specifically included in contract with seller. Yeah, so good point. I will tell you this, guys, no matter where you are, whether you're wholesaling yourself or you're representing a wholesaler, when the first contract is written, where you name the buyer on usually it's the top of the first page where you name the property, you name the seller, you name the buyer. On the buyer's line, instead of saying Jane Doe, you would say Jane Doe in parentheses and/or assigns, okay? And what that does is that gives you the legal right to assign the contract up front. You don't have to do it later and ask for permission. You get that when you write the contract. Now, having said that, bear in mind that what that means is you can do that with arm's length transactions where you have an owner that you're working directly with. But if you're working with bank-owned properties, and a lot of you are doing that, I've done tons of them over the years. The banks got savvy to that several years ago, probably more than a dozen years ago, and it got to the point where they were saying if they ever got a contract, a bank-owned property, and the offer given to them had in there the words and/or signs, they would reject the contract. Okay, and that's where we started coming up with the whole thing about putting in an LLC, selling LLC. And by the way, Washington, I think was that Sandra? Let me see who was, or that was Dawn. It doesn't mean you can't sell the LLC. It's just what that means is you can't avoid the transfer tax. If I could be mistaken there, but that's usually what the state has that rule in there for, because they always want to collect their transfer tax. Okay. Now, since we're bringing all this up, let's talk about another alternative that works in some states, in some provinces, and not in others. Okay, and that subject is the subject of a net listing. Okay, so what this is it's a form of wholesaling, but with a different angle. Okay, and just here's how this works. Let me just go through it, and it'll make a lot more sense. Okay, you've now got the basics of wholesaling, and in a little bit, guys. Hopefully, I have time. I'm going to give you the advanced version of wholesaling. Okay, right now we're just want to get through the basic stuff. Okay, a net listing works like this. Let's just take a regular old traditional transaction where a realtor is involved. Okay, the agent gets a property under contract to sell. They get what's called a listing agreement on that property. And in the listing agreement, you specify a certain payment agreement. And it's usually in the form of a commission. Obviously, it's mostly always commission. It doesn't have to be. That's just the kind of the industry norm, if you will. So the realtor earns a commission when the property is actually sold, usually 5, 6, 7%. Okay, and if another agent brings in the buyer, that listing agent has to share that commission. Often it's split right down the middle, but sometimes, let's say you're getting 7% as a listing agent. You can write your listing when you put the listing out there to the marketplace and you promote that property. You can disclose right in there in the listing that you're going to keep 4% as the selling agent, and the buyer's agent's only going to get 3%. You can do that. Okay, I've done that a number of times actually. So, as a matter of fact, when the market was going hot and heavy, and I had sometimes I was juggling as many as 180 some odd listings, and so I had the goods, and I had a lot of buyers coming in from other agents. I would, even at 5%, I would take 3% and give them 2%, and I never got any quandary. I had some people unhappy about it, but it was disclosed ahead of time, and they want to get some money coming in, so they take the deal. So in any case, back to a net listing. Here's how a net listing works. Instead of you specifying like a specific percentage or a specific amount, what you would say is this. Here's the example. Let's say you've got a property that when you approach the seller, they say, I just want to get $100,000. I just need $100,000. Okay. And you know that you believe the property is probably worth 120. and it will make a good investment because it's an older home. It has old kitchens and old carpeting and old bathrooms and things like that. What you could do is approach the seller. In the case of a net listing in certain states, this is what you can do. Say, Mr. Seller, Mrs. Seller, I'm willing to take this property on as a listing. However, under the circumstances, I would like to do what's called a net listing, which means this. You want $100,000. I will base my compensation on anything we bring in on the sale over and above $100,000. So if I sell it for $110,000, I'm going to keep $10,000 as my payment, as my commission. Are you okay with that? And if the seller says yes, then you can write up what's called a net listing. Whereas you put it in there that they get $100,000. And here's how it works actually. You would say if the property doesn't sell for $100,000, they don't have to sell it. If it sells for over $100,000, your payment as the realtor is anything over and above $100,000. If it sells for less than $100,000, they can do that. They're not required to. Then you earn nothing. If it sells for $100,000 or less, you get nothing, the realtor. Okay. So let's say the property you think is going to be worth 120. So you advertise it for 120 or 125, and you get an offer on it or some offers, and you negotiate back and forth, and you end up getting 110. You could basically find yourself earning $10,000, and the seller still gets to 100,000, so they're happy. Okay. Now bear in mind, there are states where this is legal, and there are states where they do not allow it. So all you have to do is go to your state's Board of Realtors website and type in that subject, net listing, and they will tell you whether or not they allow it. Okay. If they don't allow it, then obviously you can't do it. Okay. I've seen all kinds of neat compensation structures designed that sort of look like net listing, but it's technically not a net listing. So just remember, as a realtor, you don't have to just take a percentage. You can say, look, I will take, here's what happened. I had a property one time. It was about somewhere between $15 and $20 million. Okay. What the seller wanted was $15 million. And my compensation was going to be only $500,000 on the sale of the property if it's sold for anything up to $15 million. The reason I took the deal is this: if we sold it for greater than $15,000, anything up to $20 million, I would get 50% of the proceeds between 15 and 20 million. So in other words, if I sold it for 20 million, I would get my first 500,000, and then I would get another 2.5 million because I sold her for 5 million more than the 15 million that the owner wanted. Okay, $2.5 million plus 500,000 is $3 million payment. If it was sold for over 20 million, I would get the first 500,000. I would get the 2.5 million, and then I would go back to a 3% after the $20 million mark. That's the deal we struck. Okay. And in fact, I'll keep you guys posted. There's another one we have coming up. Unfortunately, I can't give the details because it's not public information yet, but I'll share it with you when it comes up. And we're going to structure it similarly. So in any case, you can do all kinds of neat things. I just wanted to show you the basic net listing because it may be possible in your state or province. All right. So in any case, let me check for questions here before I go forward. I want to show you some really neat stuff that's going to help you tremendously. Okay. Especially when it comes to working with wholesalers. So let's scroll down here. Yeah, guys, if you have questions, absolutely, please let me know. Just remember, all of this is in your material. Okay. Well, depending on what program you're in, but all this is available to you in the book form for free. If you decide to take the training program on this, of course, you get a lot more. But what I want to do now is show you how this could work in a very profitable way, and a way that's win-win for everybody. All right. So the basic structure is right here. We just went over it a little while ago. We've got the house A for sale, party A. We've got B, the wholesaler. Okay. And we got C, the ultimate buyer. So A would like to sell the house. B gets the house A under contract. and earns a wholesale fee. C purchases the sales agreement from B. This person buys the sales agreement from this person for a fee, and eventually this person buys the house. Basic structure, all right? So far, so good. Now let's say you're an agent and you want to participate in this, okay? You actually can in a very big way. So introduce the investor agent, all right? So here's what could happen. I'll just talk about it first, and I'll show you the diagram, and then we'll give you a written description. So no matter what we do, you're gonna grasp this. D, being the smart agent that she is, recognizes this is going on and wants to participate in this. So what she'll do is she'll strike an agreement with the wholesaler. Okay. Now you cannot charge a wholesaler a commission. You can't legally do it because your wholesaler, remember, is never taking possession or ownership of the property. But you can charge a marketing fee. You can charge them a basic service fee. For every wholesale deal you'll get involved with, they give you $1,000. That's what I did, okay? And many other people too, by the way. So what happens is B is getting busy. And they're like, gee, I wish I could do more wholesale deals. You think you can help me out? And D says yes. She'll go get the property under contract for listing. D will list for sale property A. Party B still gets property A under contract, okay? What's happening now, though, is D, agent D, is earning a commission and earning a marketing fee from the wholesaler. Now, the other thing, too, that people like is, hey, can you also find the buyer for me? Because I'm pretty busy. And D says, yes, that's what I do. I'm an agent. She goes out and finds the buyer, earns a buyer sales commission. So now she's earned a listing commission, a buyer commission, and a marketing fee from the wholesaler. Perfectly legal, perfectly legit. Everything's documented. And remember, D's acting as an agent. She's not wholesaling herself, at least not now. We'll talk about that later. All right, now that's good so far, but it gets even better. All right. So let's say, let's just go through this, right? Let's just repeat this. So you got property A, the owner of the property, wholesaler B, buyer C, and agent D. So remember, this is what we just described. D gets an agreement signed with the wholesaler B, earning a marketing fee for every property she gets involved in. Okay. She gets the property A listed for sale. She represents B as the buyer, essentially, is what she's doing. They get the property under contract. B sells the property to D, B sells the contract to C, who D brought in. This is the agent earning the buyer side commission again, right? All right. So in any case, eventually C buys the property from A. So agent D collects a listing commission, a fee from the wholesaler, and a buyer commission. Now, here's where it gets better, right? Let's say the subject property is a flip. So just let that sit down for a second. Let's say this is going to be a flip. You know, party C wants to flip this property. Once they remodel the property, they have to get it sold. So they'll contract with the same agent, agent D, to list the property. So now agent D has already earned a listing commission on the first sale. She's also earned a buyer commission from this guy, who's also now going to turn it around and sell it for profit because it's a flip. She'll list it with him. She gets now a second listing commission. And if she's really having a good day, she'll find the final buyer who's actually going to live in the property. So she just earned literally 4 commissions, 2 listing commissions, 2 buyer commissions, and 1 marketing or wholesale fee. So in any case, let's just sit on that for just a second, okay? And let me check for questions. I already see we got one coming in here. Cedric, hey Cedric, how you doing, buddy? All right, Cedric, can you define marketing fee? So marketing fee, if you talk to your tax accountant or your broker or your state, Cedric, what it is, it's not a percentage-based commission. It's a flat fee. So for example, let's just assume I'm providing just any old service to you, okay? You can call it a service fee if you want to, but in this case, it's essentially your marketing. You're acting as a marketer to find people and find properties. That's why we call it a marketing fee. but it's really nothing more than a service fee, Cedric. So it's not much different than, if you went to a tax accountant and pay them to do your taxes, or you went to an attorney and pay them a fee to present you in a suit. We just call it a marketing fee because of the nature of the business, right? But essentially it's a service fee. So it's a flat fee, can't be a percentage. That's the main thing to remember. It cannot be a percentage, it must be a flat fee, okay? As soon as, if you ever make it a percentage or something relative to the dollar amount in any way, shape, or form, your state or province will construe that as a commission, and perhaps your state board of realtors might pursue you and say you're practicing real estate brokerage without a license, which leads me to an interesting subject. In most states and provinces, if you wholesale 5 or more deals in a year, actually this starts at the federal level. The federal government can look at you and say, well, wait a second, you're a dealer. We're going to assign you what's called dealer status, and they'll make you file what's called in the state's Schedule C, which is a corporate addendum to your tax return. It's actually, you're almost like not filing a complete separate return. You just have to add Schedule C in the states, okay? In Canada, everything's corporation in terms of business, right? But in any case, let's say they do that. You're thinking, well, no big deal. I have to pay taxes on that. I got to pay taxes anyways, all right? So by the way, remember, when you're wholesaling, you're earning money, and you really should you have to be reporting that, because if you don't, the IRS is going to come down on you pretty hard. In any case, what they could do is assign you dealer status, make you file Schedule C, which means they're looking at you as a dealer. All of a sudden, the state steps in, particularly the State Board of Realtors, and says, "Wait a second! If you're a dealer, that means you're participating in the purchase and sale of real estate. But guess what? You don't have a license. Now you're violating state real estate law, and they could fine you, and they will fine you." So, in any case, there's lots of these things you've got to remember when it comes to wholesaling. That's why we like wholesaling through LLCs, right? In most cases. But I just want to go over that with you so you understand the implications or ramifications. So if you're an agent, you can participate in all this. It basically arm's length. You're not actively wholesaling yourself, so you're okay, and you're basically making money 4 or 5 different ways, right? Now, before we talk about agents who are wholesaling, let's talk about selling the contract, right? In any case, the bottom line is this. When you're selling a wholesale deal, you've got to make that thing look good, okay? A lot of wholesalers take shortcuts in their marketing and shortcuts in their advertising, and they really don't put their best foot forward. They maybe have a great deal, but they don't package it up properly. They don't make it look shiny and really desirable. It's like the old saying, we got this from Bill Cosby many years ago before he was all over the news. But in any case, he had a famous saying. He said, look, if you bring me a steak dinner and you serve it on a trash can lid, I'm not going to want that steak dinner because you served it on a trash can lid. It looks bad. But if you bring me that same steak dinner and serve it on fine china and fine silverware and fine crystal, I'm going to gobble that thing up because it looks really good. Same thing in business. You got to make what you got look really good. There's an old story, a true story about oats. Okay, cream of wheat and oats. If you Quaker oats, just look on the grocery store shelf. Quaker oats. Back in the 1800s, that same ingredient was fed to horses. They fed it to horses. Okay, they fed oats to horses. In that they basically the meal was fed to horses. Savvy farmers realized, hey, this stuff can actually they were eating it. People were eating it, but people generally didn't want to buy it because it was oats in a big bag. It didn't look too good. Well, all he did was created a cardboard canister with a pilgrim or a Mennonite person on the cover, made it presentable. All of a sudden, everybody liked oats. Okay, Quaker oats. That's a true story. So same thing in real estate. If you're selling a wholesale deal and you got a good deal, make it present it so that it looks appealing to other people. All right. Also, you should put in a pro forma in your material to show people the numbers on the thing, which includes any deferred maintenance. You know, if it's a rental, what you believe the rents are, taxes, insurance, the whole 9 yards. Okay, and then you can promote it on your Facebook page, LinkedIn, Twitter. Of course, you should build your own website. So, any case, I want to. I'm kind of stop at this point. Before I do, I want to show you one more thing. Now, you know what? We're going to hold off on that. I'm not going to go over that. There's a creative financing techniques. We'll do that another time because it's just a big subject. What I want to do now is check for questions, because I just gave you a lot there. And there's one more thing I want to go over, and that has to do with agents who are wholesaling. Okay, it looks like give me just 1 second to go through the questions, make sure we're clear there. Okay, I think we're all clear. All right, so far we've talked about the seller properties, the wholesaler, and the buyer, and the agent. Now, what if the agent herself, D, wants to participate in wholesaling? A lot of brokers do not want us agents participating in wholesaling. Okay, in fact, a lot of states frown upon that. Lots of rules, like we talked about earlier. However, I'm going to put this out there because I'm required to. I'm not saying I'm advocating it, but it is a way that you can participate in wholesaling if you're an agent. And we have agents in Canada and in US who are doing this, okay? And here's how it works. If you're an agent, you do not want to be directly connected to a wholesale deal. The reason is your state may come down on you and say, even though it may not explicitly be written in your state's code, your ethics and your basic code of conduct, the implication is that as agents, you should be ensuring that your buyers and sellers are the ones participating in the profit of a property. They get all the equity to do with as they please. When you're wholesaling, cutting into the equity of a deal. So if you're an agent and you're wholesaling directly, just bear in mind, you could find yourself in hot water, okay? And they will find you, right? So here's how you work around that, okay? So just take this with a grain of salt. I'm not an attorney. However, I have done this, and from what I'm being told and every place that I've been that this subject has come up, this is how you do it as a realtor. First things first, you always set up an LLC, set up a separate entity where you are not the only member, you're not the sole member. You're going to be basically a passive member of the LLC. You're going to have another person who's like an officer of the LLC, and that officer of the LLC is not going to be a licensee, okay? The reason is when you find properties that you get under contract, you, the agent, are not going to get under contract in this example. You're going to have the LLC get the property under contract, okay? And you don't want to sign anything. You don't want your name showing up on anything. So you don't sign for the LLC, your officer signs for the LLC, okay? That's part A. Part B is this. As an agent, you're also not going to be representing yourself or the LLC. You're going to hire another agent to act as a transaction licensee, okay, to represent you, in this case, represent the LLC. And as the agent, they will sign all the documents that need to be signed by agents. So now you've got another agent signing all the agreements, and you've got an officer of your LLC signing all the agreements from the owner's perspective. And all you are is a passive investor in the LLC. Now, whether you sell the LLC or not is material in this example. You may keep the LLC and do multiple transactions through the LLC. You're just simply selling the contracts, okay? So in that simple example there, what you've done is you've separated yourself from an arm's length transaction. You're no longer directly connected to what your LLC is, okay? And if you're really savvy, when you set up your LLC, you're not going to be the one that actually sets it up and files it with the state. You'll have a representative who typically lives in that state do the filing for you. And if someone ever looks up the LLC, they won't see your name, they'll see that person's name, okay? That's just another form of separation of duties and separating yourself from liability from the transaction. Now, having said all that, just bear in mind that you're still involved. Whether even if you got all these workarounds, you're still involved. And if something goes wrong, okay, and this is I'm just going to give you the straight skinny here. If something does go wrong, any good savvy attorney can always do what's called piercing the corporate veil and find you, okay? It may take a lot of hard work, but believe me, they can do it, okay? Now, what I mean by that is in spite of your best efforts, anybody can sue anybody else at any time for anything, and whether you're in U.S. or Canada, right? In the case of this type of transaction, there's no limits, like there's no tort law, like in what they do with automobile insurance. That doesn't exist here. So if somebody gets upset enough, they can file a suit, and an attorney is going to name everybody, including their uncle, in the suit. So in any case, I just want to throw that out there. I'm not trying to scare you. I'm just telling you this. There is a way you can do it. But bear in mind, in spite of your best efforts, if something does go wrong, you could still be attached in a suit. If somebody knows that somehow or another you were involved, like you're calling the shots, things like that. In any case, I just want to put that out there as a last piece of information tonight to inform you, but also to get your wheels spinning, because all of this took a good bit of creativity. And this is just the big picture. There's a whole entire training program behind all this, okay? So let's do this. Let me go back to the questions and see if we have any questions. And actually we don't. Well, that's surprising. All the questions came up front tonight. Hey guys, if you have questions, now's the time to let me know. Kind of a unique subject. I don't know exactly when we're going to be rolling this one out. Again, we do it every year. So if you don't get in this time around, you can do it next year. But some of you, or actually a lot of you, have been asking about wholesaling. There is an entire program just on this to show you how to profit from it. And if you're a current student, doesn't matter what program you're in, you get the program, if half price. You don't have to. As a current student, everything you get is automatically 50% off what you see online. You don't have to pay what other people are paying online, is what I'm getting at. Okay. Now, real quick, I want to tell you what's coming up down the road here. First of all, the next week webinar is going to be, hang on one second, January. Okay, that's going to be Wednesday the 17th. All right, we'll still be in Florida. I'm in Florida this month, next month, and also most of March, okay? So I'll be on East Coast time. In March, I want to give you guys a heads up so you can plan and prepare for it. We are going to be finally putting on our first 3-day conference in Orlando, Florida on March 16th, 17th, and 18th. You're all going to be invited. And no, you're not going to have to pay the full fee. It's just going to be, we have to charge you something to cover the cost of the event. There's food, all kinds of fees associated. We got to pay for the space there. There's also other people involved, organizers, and everybody has to pay. So it's not going to be a profit center for us. We're going to make it so that we basically have our costs covered. But in any case, mark that on your calendars, guys, because a lot of you have been asking for that the last two or more years. We didn't get to it last year. We were going to do it this year. So we just made the commitment. We've already plugged down a lot of the money to get this thing organized with professional event organizers. We're not trying to just wing this. We're doing it professionally. And it's going to be 3 days of solid content, okay? You're going to learn an awful lot. You're going to be able to network with each other, finally meet each other in person. We're also going to bring in investors, okay, from around Florida and internationally, okay, and mostly U.S. and Canada, but also internationally. So and people are asking about the hotel. We're going to know what hotel it is by tomorrow. I know some of you are already asking about this. As soon as we know the hotel, we're going to get that to you. Okay. Hey, real quick, let me go back to questions. I see some more questions came in here. This is Wendy. Hey, Wendy, how you doing? What type of agreement is used between the wholesaler and the agent for a fee? What you're doing is, it's not something, well, here's what you can do. This is the short version. Take your buyer's agency agreement, okay? And what you do is, in there, you make the fee a flat fee. So cross out anything that has to do with commission. In fact, where it talks about compensation, what I would do when you say see Exhibit A, and you get a blank addendum, and Exhibit A, you type in the compensation agreement, which is a flat fee. Type this in, Wendy. So I'm glad you asked this. You just reminded me of something else. What you say in there is, you say this buyer's agency agreement survives a transfer of contract or an assignment of contract. So let's say somebody's selling an LLC and you represent the LLC, your role as the buyer's agent survives the transfer, okay? Same thing with assignment of contract. You write it right in the contract that this contract is being assigned. Your role as the buyer's agent survives the transfer. So thanks, Wendy, for bringing it up. Let's see, Daryl, do you know what hotel? Will there be a group? Yes, so we'll be a group. So Daryl, that's what they're working on right now. In fact, I just got about 7 emails today. What's funny is I'm the lead trainer for this education platform for My Investment Services, and help develop product. But the actual ownership group, they give us a lot of latitude, because we're the ones who are out there working with the students. So in any case, I get to have some input into this. And what I'm going to do tonight and tomorrow is we're going to settle on which hotel it's going to be, and we'll get the word out. Beverly's going to send out an announcement. So get in early. I think we're going to keep it to like 150 spots. And I've taught well over 13,000 people just in the last few years, and over 1,300 directly one-on-one through these training programs. So it's probably, I would just, if you think you're going to do it, just go ahead and jump in, I guess is what I'm saying. We will do another one probably later in the year, but right now we just want to get the first one up and running. We may just do it once a year. I'm not sure yet. We're being told to do it twice a year. I like to twice a year myself, but in any case, good. Thanks for the question. Okay, guys, that's pretty much it. If you do have more questions, you can always email me. Also, let me know if you want to speak about something specifically on the webinars. I'm probably going to give you a lot more information next week on wholesaling. Right now, I'm not quite sure. We may have a guest speaker. We haven't got confirmation on that yet. And we're also meeting again on the 23rd, which is a Tuesday. So next Wednesday, the 17th, the following Tuesday, the 23rd. And final one for the month is Tuesday, the 30th. I'll be down in Fort Myers. So in any case, guys, I hope you have a great night. I appreciate your participation. Kind of an interesting subject. This really is a lot of times when I give people what I gave you on the, when I added in the agent and talked about all the ways you can make money, a lot of times it's people, I can see their eyes glazing over. But just know this, there's lots of us to do. In fact, there was an interview. If you go to the silver level membership site, go to the interviews and look for Kelly O'Keefe. She's from Boston, Mass. And we talk about this very subject. She's a perfect example of somebody who does that. So in any case, God bless you all. I hope you have a wonderful rest of the week. And for those of you in Eastern Seaboard and anywhere basically in the middle of the continent and east, I hope that you're going to be warming up soon. I feel for you. I left Canada last week, left Ontario was -5, wind chill was like -35. That's Fahrenheit. Celsius was probably more like -25 or something. Any case, it's still cold up there. I know, because I speak to my wife every day, and there's a lot of whiteouts. But down here in Florida today, it was probably 5 and pretty warm. So in any case, we will see you guys next week. And in the meantime, God bless you and your families, and have a good night. Okay, you guys, take care. Bye-bye.